Welcome back to Investing Talk Podcast. Today, we're looking into a question that I suspect has been on a few minds. Is Incannex Healthcare a good buy right now? We've pulled together information from, well, quite a few places to try and give you a clear, concise picture of this pretty interesting company. Our goal here, like always, is to help you cut through some of the noise, get the key points, and get up to speed quickly. We'll explore Incannex Healthcare's business, their financials, market signals, and what the experts are thinking about its potential down the road. Before we get started, though, if you find this useful, please think about subscribing, maybe liking this session, leaving a comment. Your support really does help us keep this going. And hey, if you're feeling extra generous, you can even buy us a coffee. Oh, and if there's a specific company you want us to look into next time, just drop the name in the comments. We definitely like hearing from you.
Yeah, and what's really interesting with Incannex Healthcare is just the space they operate in. It's so dynamic, so emergent. It makes figuring out their prospects, well, it's challenging, but potentially pretty rewarding too.
Okay, so let's start right there, the basics. What exactly does Incannex Healthcare do?
Right. So Incannex Healthcare is a biopharmaceutical company. They're focused on developing psychedelic medicines and also cannabis-derived therapies.
Psychedelics and cannabis, that's definitely a high-growth area, especially with some of the regulation changes we've seen like in Europe recently.
Absolutely. It's a sector seeing a lot of movement. And yes, those favorable European cannabis regs definitely play into the landscape here.
And we need to be clear, they're very much early stage, right? This isn't like a big pharma company with drugs already selling millions.
Exactly. That's crucial. They are a clinical stage biotech firm. So that means their whole business model, right now anyway, hinges on ongoing investment in R&D, research and development.
Okay.
They've got two main drug candidates in trials that everyone's watching. One is IXHL 42X. That's for obstructive sleep apnea, and it's in phase 23 trials, so quite advanced. And the other is PSX0001. That's a psilocybin treatment for anxiety, and that one's in phase 2B trials.
Okay, psilocybin for anxiety. And you mentioned IHL 42X for sleep apnea. The phase 2 data sounded pretty good, something about bioavailability.
Yes, the phase 2 results for IHL 42X were quite promising. They showed bioavailability that was comparable to existing reference drugs.
What does that actually mean, bioavailability comparable? Why is that important for something like sleep apnea?
Good question. It basically means the drug gets absorbed and becomes available in the body at levels similar to drugs already known and approved. That's a positive sign for regulators, suggesting it could be dosed effectively and predictably. For sleep apnea, which affects so many people, having a unique cannabis-based therapy that shows this kind of profile early on, that could be a real edge if it continues to prove out in later trials.
Okay, that makes sense. So promising pipeline, but still very much in development. Let's unpack the financials then. What do the numbers look like?
Well, the numbers definitely reflect that early stage. Trailing 12 months revenue is tiny, about $98,000.
98,000.
Okay. Yeah. But they had a net loss of $21.74 million.
Right. So a big loss.
Yeah.
Which you said is typical for this stage.
It is. Negative net income is completely normal when you're a clinical stage company pouring everything into developing those drug candidates. Profitability isn't the focus yet.
So no point looking for earnings projections or anything like that.
Exactly. They don't really exist in a meaningful way at this stage. And while the sources didn't flag specific debt issues, the key thing to understand is they're operating with what's called a cash burn.
Cash burn, meaning they're spending more cash than they're bringing in to fund the research.
Precisely. They're funding that pipeline development.
Okay, so if I'm looking at this company, why should I care so much about that cash burn? What does it really imply?
It implies risk, fundamentally. It means the company's survival and progress depend on their ability to keep raising money until or if one of their drugs gets approved and starts generating revenue. You need to ask, how much cash do they have left? How long can they keep operating at this rate? What's their runway? It adds a layer of financial risk on top of the scientific risk inherent in drug development. You need to be comfortable with that uncertainty.
Right. Financial risk and scientific risk. Which brings us to, well, valuation. This sounds like where it gets really interesting, maybe even tricky. How do you value a company like this?
Yeah, tricky is a good word for it. Your standard metrics like price to earnings or PE ratio, they just don't apply because there are no positive earnings.
So it's useless here.
Pretty much. You've got a market cap around, $93 million and almost no revenue. So that valuation, it's built entirely on speculation about the future success of those drugs, not on current financial health.
And I saw the price forecast.
Yeah.
They seem to be all over the place. Huge potential upside in some, but others are suggesting maybe downside.
They really are. It highlights the uncertainty. Some models, probably based on optimistic assumptions about trial success and market capture, predict a big jump, maybe up to around $4.38, even $4.97 by 2025.
Wow, that's like a 280% increase from where it is now, around a dollar.
Exactly, a huge potential return. But then other models are much more cautious, suggesting it might drift sideways or even down, maybe towards the $0.62 range.
Why such a massive difference? What drives those models so far apart?
It comes down to the assumptions you plug in. Things like, what's the probability IHL 42X actually gets approved? How big is the sleep apnea market they can capture? What about PSX 001? Small changes in those probability assumptions for clinical trials or regulatory approval can lead to vastly different valuation outcomes. It's very sensitive.
Okay, that makes sense. It's all about assumptions on future events.
Yeah.
Now, looking at recent market action, the stock certainly hasn't been boring. Big surge recently, right? Over 60%.
And a pre-market jump, too.
Yeah, it's a significant surge, 64.82% recently, and there was that pre-market jump you mentioned, over 40% back on July 21st. What was behind that?
Primarily driven by that positive clinical trial news for IHL 42X we talked about. That, combined with the backdrop of those favorable European cannabis regulation shifts, really seemed to ignite interest. Good news on the pipeline is key.
So, news-driven moves. What about the technical indicators? Are they telling us anything else?
Well, the relative strength index, the 14-day RSI, is quite high, around 87.65.
Okay, and high RSI usually means?
Often indicates an overbought condition, suggests the stock price might have moved up too far, too fast, and could be due for a pullback or consolidation. The stock also shows really high volatility, reported at 57.27%, and its beta is elevated at 2.47.
Beta of 2.47, meaning it moves theoretically almost 2.5 times as much as the overall market.
That's the idea, yes. Significantly more volatile than the average stock, so big potential swings up and down.
And putting it all together, what's the general feeling or sentiment around Incannex healthcare in the market right now?
Yeah.
Fearful, greedy?
It's a bit mixed, actually. Looking at social media buzz and things like the fear and greed index, the sentiment seems closer to fear overall. But there are these cautious, bullish undertones, likely driven by that recent news and the potential people see in the pipeline. So not outright panic, but certainly not widespread euphoria either. Maybe cautious optimism mixed with a healthy dose of skepticism.
Okay, a mixed picture. So, looking ahead then, what are the key things investors should be watching for? What are the potential catalysts that could move the needle here?
Near term, definitely keep an eye out for any further clinical trial updates. News on either IHL 42X or PSX 001 could be significant. Regulatory decisions are also huge. Any movement on approvals related to cannabis or psychedelics, especially in key markets, would be critical. And of course, their financial reporting, like the earnings report expected next May, will give an update on that cash burn situation.
And longer term, what would be the big game changers?
Longer term, the ultimate upward catalyst would be successful commercial launches. If IHL 42X or PSX 001 actually get approved and start selling, that fundamentally changes the company's story. Beyond that, you could see new partnerships, maybe licensing deals, or even M&A activity. Larger companies might look to acquire Incannex to get hold of their pipeline if the data continues to look strong.
It really does underscore that high-stakes, high-reward feel, doesn't it? Everything seems to hinge on these specific scientific hurdles and regulatory gates.
Absolutely. It's less about quarterly earnings beats and more about these major binary events, trial success or failure, approval or rejection.
Which naturally leads us to the other side of the coin, the risks. We've touched on some, but let's be explicit. What are the big downsides investors need to understand with Incannex Healthcare?
Yeah, this is crucial. Number one is clinical trial risk. Trials can fail, even in late stages. Promising phase 2 data doesn't guarantee phase 3 success or final approval.
Right, the valley of death for biotech.
Exactly. Then there are the regulatory hurdles. Getting drugs approved, especially in novel areas like psychedelics and cannabis, is complex and the goalpost can shift. As a small cap, or really micro cap stock, you also have the typical volatility and liquidity risks. Price swings can be dramatic, and it might be harder to sell shares quickly without affecting the price.
Okay, trial failure, regulatory roadblocks, volatility. What else?
The financial sustainability risk we talked about, that cash burn, they need ongoing access to capital until they reach profitability, which isn't guaranteed. And finally, the regulatory landscape itself is a risk. Even if their science is good, unfavorable policy changes regarding cannabis or psychedelics could seriously hurt their prospects in valuation.
So definitely not a stock for someone who wants to sleep easy every night, perhaps. The high volatility alone requires a plan.
Definitely. If you're risk averse or don't have a very clear investment thesis and risk management strategy, this kind of stock can be challenging. You need to go in with eyes wide open to the potential downside.
Okay, so let's try and bring it all together then. After looking at the pipeline, the financials, the market signals, the risks, what's the overall assessment? Is Incannex Healthcare a buy right now?
Based on everything, we'd probably give it a rating of, say, 5 out of 10.
Middle of the road.
Yeah, it signifies that high risk, high reward potential. Success hinges almost entirely on those clinical outcomes and regulatory approvals. It's far more speculative than it is a stable investment at this point.
And if someone is comfortable with that speculative nature, if they're bullish on the potential, are there recommended ways to approach it? Entry points, strategies?
Well, for shorter-term traders, given that recent big run-up and the high RSI suggesting it's overbought, chasing it right here might be risky. A more cautious entry might be to wait for a pullback, maybe into the $0.8290 range.
Let it cool off a bit.
Exactly. Or if there's a dip on some news or just broader market weakness, maybe closer to $0.60 or $0.70 could present an opportunity. Given the volatility, a stop loss is pretty essential, maybe 15–20% below your entry point to manage that downside risk.
And taking profits.
With these kinds of stocks that can move dramatically, taking partial profits on the way up isn't a bad idea. Maybe setting targets around, say, a 50% gain, and perhaps using trailing stops to let winners run while protecting gain.
Okay, that's for traders. What about longer-term investors, people who believe in the science?
For long-term investors, sure, you could consider a small speculative position if you're genuinely bullish on their specific drugs and the whole therapeutic area. But you absolutely have to be prepared for the possibility of, well, prolonged periods where the stock doesn't perform well or even loses value before potentially reaching profitability.
So patience is key.
Patience, a strong stomach for volatility, and an investment horizon of at least, I'd say, 2 to 3 years, maybe longer. It's a bet on the science and regulatory pathway eventually succeeding, not on near-term financials.
It really is fascinating how detached the current valuation is from traditional metrics and how tied it is to those future breakthroughs.
Completely. It's a different kind of investing calculus.
So as we wrap up our look at Incannex Healthcare, here's something maybe to think about. You have this sector, biotech, especially areas like psychedelics, with the potential for truly life-changing treatments. How do you, as someone considering an investment, weigh that potential societal impact against the very real financial risks we've just discussed? Where does that balance lie for you? It's definitely something worth mulling over. Thanks for tuning in to Investing Talk Podcast. Remember to subscribe, like, and drop us a comment, especially if there's a company you want us to tackle next. We'll be back soon with another exploration. Until next time, keep learning.